Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Mark Smithson and CFO Josh Egan of Mark's Electrical, a fast-growing online retailer of cookers, fridges, freezers, and televisions. So welcome, gents.
Yeah, hi, Paul. How are you doing? Nice to see you.
Yeah, well, big congrats on today's very strong full-year results and positive start to the new year. But before we sort of dig into the detail, Mark, I don't suppose you could quickly give us a bird's-eye view of sort of the health of the consumer, the current conditions, and really, frankly, how Mark's is winning so much share against its rivals in quite challenging, macro backdrop for the consumer.
Yeah. Well, it's obviously very difficult out there for everyone, Paul. People's disposable income's getting attacked from all angles, isn't it? But it's all about keeping your pricing very sharp, which is what it's all about. We've got very complex software which tracks all the pricing in the market, and it makes sure we're always on the money. That's a real key part of it. And not only that, there's not many things that differentiate people on, companies on the internet selling our type of product, apart from their own logistics and having a great Trustpilot rating, which we've got 4.8 out of 5, which is market leading. It's in front of all our competition, which I'm very proud of, which is very difficult to achieve when you're growing your business, which we've done in a difficult market. We've had a great increase on the revenue, but to actually keep your Trustpilot rating at 4.5, we're almost nudging at 4.9, but we're still at 4.8. But that's all driven by your free next day delivery. And I always go on about it, but it is so important to have your own trucks, your own fleet of Mercedes lorries that do deliveries 7 days a week. It's Christmas Day and Easter Sunday, I think, are the only 2 days we don't deliver now. So that's what it's all about.
You must be getting huge sort of customer endorsements. So you ones who actually, you get this very high sort of Trustpilot, but you must get sort of when somebody puts into the house, etc., and then says to the friend, "Oh, I got a fridge freezer from Mark's Electrical," and then if somebody says, "Okay, I'm in the market as well," and they must sort of like independently, you probably don't track it, but tell these other guys to at least consider you.
Yeah, well, we've seen a brand awareness growth. Well, we conducted a YouGov poll last August. I think we were about 6% of the poll that people have heard of us in the UK, which was, pretty good. We've only managed to move the needle another 1%. We're up to 7% now, which isn't a lot, but, it's probably 17, 18% increase, which is pretty good. But, it's very difficult to get your brand awareness out there. And when we floated, we were the UK's best kept secret. It's difficult to get your marketing right, but, we are getting so much better at marketing. This time last year, we were very poor. If we'd probably done it this time last year, it would have been about 3 or 4%. So we had already moved the needle up to 6, and now we're at 7. So that's what it's all about, just pushing that brand awareness. And once people have dealt with us, it's like, why wouldn't you buy off us again?
And also with that Trustpilot score, I mean, you should consider sort of advising Downing Street on improving its Trustpilot score.
Yeah, well, good. Funny you should say that, but guess who ordered a product off us 2 weeks ago?
Oh, okay, that's good.
Number 10 Downing Street. And before that, it was not a beer fridge.
Fabulous. That's even the
lady dishwasher.
Fabulous. Okay, brilliant. Okay, well, Josh, just in terms of the results, I mean, really strong sort of top line growth and a positive start to 20% like for like growth actually in the year to date, which I think compared to markets actually down. So that's an incredible difference. But also you've got strong margins as well, better than sort of like, the underlying EBITDA margins are stronger than the underlying market, and your cash generation. Can you just sort of run us through those key highlights?
Yeah, sure, Paul. So we did 44% revenue growth, and that was against a particularly tough comparative of 78% in the prior year. Did a 9% EBITDA margin, which we were very happy with. We kept a really tight control on costs, both overheads, gross margin, as well as advertising spend. As Mark mentioned, we spent a lot more on advertising this year, but we still stayed within our budget and achieved a 9% EBITDA margin. Worked pretty hard as a team on working capital throughout the year, so brought working capital down quite significantly, and that's helped with the cash conversion. You've got an operating cash conversion of nearly 120%, and resulting in, you know, return on capital employed of 65%. So some really strong numbers from us.
Yeah, and just in terms of that sort of like, you know, the like for like performance, how much is price and how much is sort of volume?
Yeah, so I mean, in the early months, as you mentioned, Paul, we're seeing a strong start to the year versus a pretty challenging market backdrop. We're growing in the first few months at about 20% plus. Volume growth, actually, it's about 30%, Paul, believe it or not.
Wow.
Yeah, it is. It's very strong. And for us, what we're actually seeing, because we're now appealing to, you know, a wider customer basket, wider demographic, we're actually seeing a slight decrease in the average order value, but we're seeing some really strong volume growth.
Right. And how much is that sort of split between sort of existing customers and new customers? You sort of like, you know, are you getting existing customers coming back more than once?
Yeah, so about 14 months ago, we'd have had about 21% returning customer. At the year end, we were 25% returning customer, and we're about 26% returning customer in the past couple of months. So yeah, it's what we're doing is definitely working. The customers are coming back, which is great. Great.
And then Mark, just on the sort of the marketing and the promotion, you just take us through what you're sort of planning in terms of, you know, going forward, because you had a very successful offline and online sort of like, you know, promotion strategy.
Yeah, I mean, the brand building through TV. I mean, that's a particular avenue we're following, Paul. You know,
well, the Prime Minister saw it.
Yeah, well, exactly. Yeah,
you're going to the right channels.
Yeah, I don't know what channel he was watching it on though. Yeah, you have to laugh, don't you? So yeah, I mean, it's all about brand building, as we know. Getting your awareness out there is very difficult. We're now going to other areas, so we're now going to, you know, Cornwall, Devon, which we weren't going to before, Edinburgh and Glasgow, as well as the lakes as well. So we're still targeting our audience. So I think we're over is it over 92% of the population we're delivering to now, Josh? Something like that, isn't it? 93.
Yeah, in the UK. Yeah,
crikey.
Yeah, so it's a high, you know, but you know, we've got such a small amount of people that have heard of us, and the market's worth, you know, some 8 billion. You know, with TV added in there as well, major domestic appliances, so MDA and TV, it's nearly 8 billion. You know, so we've got such a small, you know, we've done 1% market share if you look at it like that. That's a huge runway. There's loads to go for, and ultimately we sell products that are things that people need. You know, through COVID, we were allowed to continue trading because it's a necessity. You know, if your freezer goes wrong, you need a freezer. Your cooker goes wrong, you need a cooker, and the same applies for your washing machine as well. You could argue the case for a dishwasher and tumble dryer, but you know, all the key appliances, that they are distressed purchases, and 80% of the products we sell are distressed purchases.
And when you say distressed, do you mean emergency, sort of like your fridge packs up or something?
Yeah, you need a product, it's gone wrong, your fridge freezer's, you know, leaking water all over the floor, the food is defrosting, you know, you need something tomorrow. The 5th emergency service, call Mark's Electrical, get online, have a look.
Great. And then Josh, just in terms of the cost of the sort of the marketing on a unit, sort of like, I don't know, cost of acquisition of new person or cost to click, what are you seeing at the sort of coalface? Because it was pretty competitive heading into to Christmas. Yeah,
it was pretty. We talked about this, Paul. It was quite competitive heading into Christmas. We thought that it would tail off in January, and it didn't. Okay. If anything, we've seen the cost kind of stabilize at those January, February levels, but they're still elevated versus the prior year. So it is more expensive this year than last year to advertise online, and we're seeing quite a lot of competitive, you know, pressure, given that the market is down somewhat. And the competitors are obviously spending money on advertising online, so we're following suit too, and just really trying hard to keep a lid on that marketing cost and keep those costs under control.
We've got a good marketing agency there, or he's just coming up with some very good ideas. I don't know which, but it's certainly working, so keep going. Now, just in terms of the supply chain, Mark, I mean, obviously, we've got China now locking down, or, you know, we've had Shanghai, which has been difficult. And I know you talked about last time in terms of most of your suppliers were coming from Germany, but they've probably got components coming from China. I don't know. Can you just give us a quick sort of like 2 penny on sort of what you're seeing in the supply chain and whether you...
Yeah, well, I mean, we've managed to grow inventory, Paul, this year, so it's not been a problem. In fact, we've had to push back on things that we'd forecast that the likes of, you know, our competition, the big competition, have they've pushed back on their forecast. So it's all of a sudden meant there's more free stock in the market, which is great. So it's nice to see that sort of tipping point, which we've now achieved now. You know, May's traditionally top quiet time of the year. But we're seeing a lot more stock on the market now, which is great. So the prices all of a sudden, instead of them keep going up and up, they're actually now dropping them, which is great to see. It's
wow. Okay, that is, yeah.
We don't source a lot of product from China as well, so that doesn't. I mean, obviously we are affected. There's a lot of components come from there, and there's a lot of microwave components with the chips still being a bit of an issue. You know, they pushed the price up on that, albeit it wasn't a big actual number per se, but it was a percentage-wise, it gone up, you know, a few 100%, but it's still only a small amount. So the manufacturers can have like leverage these price increases on things like that, and hidden behind that. But we're actually seeing prices starting to almost, well, they've definitely plateaued, I would have said. There might be a few suppliers that they've got pending price increases, but I think they might back off. That's my personal opinion. Now they're seeing the sales slow down. And then I'm just doing a comparison this morning. I thought, you know what, I need to just actually check this for myself. And I just checked out a Bosch washer, which we've sold. You know, it's one of our best-selling washers. We sold, I don't know, we've sold it well over 1,000 of them. And I was looking at it. It's a 1,400 spin, 9 kg machine. We sell it at £479. And in October 2020, that machine was £479. And today it is £479. So, you know, things have gone up, but only certain things. I mean, that's a bread and butter product. So it's nice to actually look at a comparison like that and see, you know, yes, things have gone up, but, you know, that is a sort of machine that everybody could buy. Well, probably not everyone could afford that, but would allude to buying a 1,400 spin 9 kg machine. It's not mega bucks at £479, but it's, you know, it's that sort of target. That's our target audience. It's great to see.
Yeah, no, it's marvelous for consumers. That's for sure. Sort of the cost.
It's interesting, isn't it? Yes,
it is. Yeah. And what about Mark? Just on the sort of the selling prices, what's that mean in terms of the sort of the Mark's electrical selling prices? You would do sort of like a you know, sort of a percentage add-on, or was it all really priced to the market, etc.?
No, we just like to keep it simple. That's what this business is all about. You know, it's easy to understand, we think, and it's easy to buy from us. If you want to add on the extra facilities like installation, the extra options, if you want an extended warranty, you know, we don't rely on warranties. You know, if you want the packaging taken away and recycling, or your old appliance, we do all that. Can be done for a charge. We do not rely on that. So if people stop adding on all those extras, it won't. It would have a slight impact on the business, but it would only be a few basis points. It wouldn't be a big deal. So we don't rely on that. I mean, warranties in particular, we really do not rely on warranties. We sell them, but most of the competition rely on selling a warranty. That is not the tactic we operate. It's a nice, clean business, very simple. We like to be honest and upfront. If we make a mistake, we'll fix it. Hands up, we apologise, and that's how I like to run the business.
Great. Now, Josh, when you put all that together, so we've got basically enough inventory for the, you know, for our customers. Mark is growing the top line, giving you guys a bit of a problem to keep up. But now you've got a bit of sort of like stock. It's a nice problem to have. And if you put all that together, what's sort of the outlook for the rest of the year? Because, as I say, that the top line of like for like is 20%, which is tracking exactly to where the market is currently positioning. And I think they're saying, you know, you're going from revenue of 80.5 last year to around about 96, 97, and EBITDA going from 7.2 last year to just over 8, I think it is, for sort of the market. Can you just walk us through sort of the outlook, etc.?
Yeah, I think it's a tricky one for any business at this stage, Paul, because the market's so volatile. You know, we've seen some real pressure in the first couple of months in terms of the two markets that we operate in, the consumer electronics and major domestic appliances. We've grown, we've gained market share, which we're obviously really happy about. But I think the approach from Mark and I at the moment is, you know, we just keep on pushing, keep taking each month as it comes. Yes, we'd love to deliver the numbers that you just talked about there, Paul, and we'll certainly be going after them. But we're just taking each month as it comes and seeing how it plays out and trying to gain market share.
Right. Okay. And just in terms of the sort of you talked about your cash generation, which has been excellent, and you've got round about sort of, I think it's 4 million of net cash as at the year end. And if you've got positive sort of cash generation and you've already started from a positive cash, gives you a nice position if you're a finance director. But what other than dividends, what are you going to sort of invest the money in? Is there any M&A at all, or is it really all organic?
Yeah, we're mainly focused on organic, Paul. We think that given the simplicity of the business model, organic is what makes sense the most. There's potential opportunity for dividends in the future as well. We have talked about that in the release today. So they're going to be the focus areas. Investing organically, should we need to move properties in the next few years if we outgrow our current property? We think our current property can see us to about 250 million in annual sales. So right, okay. If we look like we're going to surpass that, we'd have to move properties, and then we'd need, quite a lot of cash for some potential leasehold improvements if we were to go into something new, make sure it's fit for purpose. So yeah, hopefully a bit of a war chest to cover that type of cost as and when needed.
Well, I think the way Mark's going, you're going to be hitting that barrier fairly soon in the next couple of years.
That's the idea, Paul.
Yeah. Just in terms of the market, obviously, we talked about it's quite difficult, and we're looking at it on a month-by-month basis there, Mark. If we do go into sort of like, a more of a downturn, what sort of levers will the business look at pulling? Because you've been through many are. I mean, obviously, Marks has been around for years. So we had the great financial crisis, we had the dot-com crash, and it's probably been also around since the early 1990s when we had the difficulty in the UK, the recession there. So, what sort of levers does it pull to give it that resilience?
Yeah, well, I mean, I've been through in business 35 years, Paul, as you were saying, and we've had price rises every year, albeit different amounts. So you sort of get used to it anyway. And there's always some sort of major problem looming on the horizon or has occurred. Particularly, the last couple of years have been, certainly different. But the thing is, because we are selling 80% of the products we sell are distressed purchases, which means that, if they're broken down, your washing machine's broken, you need a new product. You don't suddenly wake up one morning and decide you want a new washing machine. So we're already in that market where people need these products already. So we're in a good position. So we're not like reliant upon the housing market. If the bubbles burst, as some people are alluding to, who knows what's around the corner of the property market. But we've always been saying there's a potential problem there, but we don't rely on that sector. The products we sell are the things that people need every day. It's almost like food. People are very considered on what they're buying. They don't just go and buy a cheap product. They quite do a lot of research. And if your website's good, which ours is, class leading website, we've got so much information on there. It's all written, it's all done in-house here at Boston Road in Leicester by our own IT and data inputting team. So it's all about showing people the differences between a cheap product washing machine at say £200 and a £500 Bosch or a £1,000 Miele, or even a £2,000, well, £1,800 Miele washing machine. So people will trade up, and they've got time to sit at home and actually work out why they're spending that money. The extra cost of electricity, it's cheaper sometimes. If you look on our website, it's cheaper to actually replace your fridge freezer now, or your freezer, because you might find it's consuming copious amounts of electricity. The cost of actually changing it to a mega energy efficient product now, within 5 years, it would pay for itself. So I guess as people become more familiar with buying, sort of the household appliances online, you'll see that the market share of online continue to increase, given that there's been a lot of education of the consumer to buy online, and you're not burdened by the legacy cost of those physical stores either, are you? I guess. Yeah. No, I mean, the cost of stores. I mean, it's very it's prohibitive, isn't it? So. Yeah, I mean, things are all going very well. Josh, do you want to take over from here now?
Yeah, on the sort of news flow then, Josh, going forward.
Yeah, so the next updates from us, I mean, we've got an AGM on the 11th of August, Paul, but the next financial update is going to be very early October, when we would be talking about the pre-close for the interim half-year results.
Okay, brilliant. And I know you've mentioned, just finally then, Mark, I know you've mentioned it before, but the sort of the target's to get sort of 10% of the UK market, which is about just over 500 million turnover. When are you going to do that then? I don't want to hold your feet to the fire, but give us a number, give us a date.
Not next year, not the year after. Let's
3 to 5 years or 5 years or something like that.
Oh, well, yeah, that's the idea, Paul. You know, let's just get pedaling hard, and we love it. It's what we do. Everyone here is really engaged, all driven, all aligned. The team, there's not just my pair of eyes on the business now since we floated. It's you've got dozens of pairs of eyes all looking at ways of saving money, improving efficiencies, and driving sales, which is it's great. I love it, and so we can do it. You can't do it all on your own. So I used to think I could do it on my own, but I've now realised you definitely can't do it on your own. And it's great having the likes of Josh and the rest of the team. So it's like we all pull together, and you wake up every morning hoping you've got a new idea and just how you're going to drive the business.
Yeah, well, a little sort of like maybe suggestion now that we've just got through the sort of the the Jubilee weekend. You might want to just drop a little note to the Queen, Buckingham Palace, and say Boris has picked up one of our fridge freezers, so you might want to do elsewhere. We could install it for free for you.
Well,
anyway,
there's a wine fridge, shall we?
Yeah, exactly. Anyway, really well done, guys, and obviously, in the sweet spot, you're doing some great stuff there. So please keep up the great work, and look forward in touching base in probably in August or in October. So well done, guys.
Thank you, Paul.
Thanks, Paul.
Thanks very much indeed. Cheers.